Alright guys, so welcome to this class once more. Like I told you guys, said this is going to be a very simple trading system. Like it's something you can master in a very short while, and it is very effective. And I call this candle sweep trading. Alright, I call it candle sweep trading. Now, this is a unique, simple trading style. It is simple, alright. As much as it is simple, it has work to be done. I won't lie to you. It has work to be done. All right. My job here, my goal here is to teach you this system in the most simplest way possible. But then you still have to put in the work yourself. All right. So now the reason why you're putting the work is just for you to understand the concept clearly. All right. You know. So in trading generally. All right. In trading the financial market generally, whether you're trading crypto, you're trading stock, you're trading forex, you're trading anything you're trading at all, you know, the most important factor when it comes to trading is finding liquidity, all right? The most important factor as much as trading is concerned is finding liquidity, and that's the whole idea of this system. This system helps you identify the liquidity area in the market so you can trade from that point. In fact, if you follow a lot of big traders in the industry, they will tell you liquidity, and that's like what moves the market. In trading the financial market, whether you're trading forex or crypto or stock, liquidity is the major factor. Alright, liquidity is the major factor. It's liquidity that runs the market. The liquidity runs the algorithm or the big banks, as we call them. All right, so liquidity is very important. Don't worry about what liquidity simply means. You get to understand that to continue in the class, so just pay attention and then we'll just keep going gradually. All right, so your job here, our job here right now, is to find this liquidity and trade from there. All right, I hope this is clear. So like I said earlier, this trading system is called candle sweep trading. All right, now in trading, liquidity is very important. All right, liquidity is very important. You need to find the liquidity, unless or else you become the liquidity. All right, so our job here, our goal in this system will be to identify liquidity in the market. Once we can find those liquidity in the market, which I will show you guys how to find it, all right, as simply as possible. Once you can find this liquidity, your job would be to trade from that point. All right, so our job is simple, is to find the liquidity and trade from there, because if you don't recognize the liquidity, you will become the liquidity. All right, that's just what it is. All right, and of course you don't want to be the liquidity, so your job would be find these liquidity areas, and I will show you how to find them in this class. All right, I hope this is clear. So let's go into the main thing for today. What is a candle sweep? All right, what's a candle sweep? In fact, what's a candle generally? Now I believe by now you all know what a candle is. You guys can see this screen, right? You don't have to answer me, but I know you can see it, right? Now you can see this is a candle. This red, this K is a candle, L is a candle, M here is a candle, A, B, C. They are all candles, right? You know, they are all candles. If we go to the real market, all right, if you go to the real market, you can see all of these are candles, right? You can see all of these. All of these are what? They are candles. You can see them like this, right? All right, so this system is all about finding the sweeps in this candle. That's the goal of this trading system. It's why I call it the candle sweep trading system, right? It's why I call it what? I call it the candle sweep trading system. All right, so let's continue. So what's a candle sweep really? A candle sweep is simply when the previous candle low or high is taken out with a sweep, not a body, by the next candle. Now let me explain this clearly. All right, so let me show you by illustration what this means. All right, so just pay attention clearly. All right, now look at these candles here. All right, you can see we have in this bullish move, we have three candles, right? We have this K candle, this L candle, and this M candles, right? Now, I told you by definition, all right, that a candle sweep simply means when the previous candle low or high is taken out with a sweep, not a body, by the next candle. What do I mean? It's simple. All right, so we have this K candle, right? You can also see this K candle, right? Now, take a look at this. This L candle is above this K candle, right? So you see this, you see this move here, right? See this move like this. So you can see that line I just put, right? So it means that this L candle has swept this K candle. That means this K candle closed here, all right? But this L candle opened and went above it with a full body. So this is not a sweep, all right? So this here, this K candle and this L candle, they are not a sweep, all right? Now, what will be a sweep is simple. Take a look at this M candle, all right? So this M candle actually swept the low of this L candle with just a wick and not the body. So a sweep of a candle would be the wick taking taking the low of a candle. I hope this is clear, right? I hope this is clear. Let me explain this again. Let me explain this again. Uh, so I'm trying to explain. I'm trying to explain what a candle sweep is, right? So I said a candle sweep is simply when the previous candle low or high is taken out. Alright? When the previous candle low or high is taken out. It's so simple. Now, I'm trying to explain to you with this illustration here. Alright? So we have a K candle here, right? We have L candle here, right? And we have the M candle here, right? Now, this L candle has opened and closed above this K candle, but it closed with a full body and not a wick, right? So we can't say that L candle has swept. We can't say that, right? Why? Because it closed with what? With the full body, right? But then take a look at this M candle and this L candle. You can see that this M candle has swept this L candle, right, with just a wick. See here, all right? You can see it, right? You can see it there at the bottom here. So that's a wick. Now, had it been that this M candle, actually came down like with a body, then it's not valid anymore, right? But however, it is just a what? A wick. So it is a valid what? Sweep. So our job in this system or in this module is practically simple to make sure that a candle is sweeping the other candle with the wick and not the body. All right. So we want to find those sweeps, those wick sweeps, and those wicks, they are what makes them sweeps. The wick makes them a sweep. Now take a look at this bearish move, for instance. Let me delete this. All right. Let me delete this quickly. Okay. Out, out. All right. So take a look at this bearish move. You can see that this B candle closed below this A candle, but then it closed with what? With the body. It closed with the body, right? So we can't consider this A and B candle a sweep. But look at this B and C candle. What happened? The C candle swept the high of this B candle, but with a wick. Can you guys see, right? You can see, right? You can see. So now this sweep is this movement is what we call a candle sweep because the body did not close. It is just the wick. Had it been this C candle, did something like this. Let me show you. Come on. Did something like this. Hold on. Give me a sec. Okay. Something like this. Something like this. All right. It will not be valid. Why? Because this is a body candle close, right? But then what it did was just simple, a wick. All right. I hope this is clear. So it is the wick that makes it a sweep and not what? The body. I hope this is clear. So this is what we call a candle sweep. Let me show you by illustration. Let me show you by chart so that you can clearly understand this better. So let's go to a real market. All right, let's go to a real market, and I'll show you clearly what I mean by that. So let me reset now. You guys can see this, right? Take a look at this. Take a look at this. All right, take a look at this. Now you can see, you guys can see this whole move. You can see this whole move to the downside. You guys can see it, right? Now pay attention here. Let me show you on the live market what this system is all about. All right. So look at all the candles here. Look at all the candles here. So this is a bearish move, right? The market is going down like this, right? Look at all the candles here. Look at these two candles. Look at these two last candles. Look at these two last candles. These ones. Can you guys see it? Yeah, you guys can see it, right? Now, what does this tell you? This tells us that what? That this last candle, this last one here, has what? Has swept the high of the previous candle with what? With a wick. Can you guys see this? All right. So this is what it means, right? It means that what? That this recent candle has swept what? The high of the last candle with a wick and not a body. And this is what we call liquidity. All right. This move, this action in the market is what we call what? Liquidity. I hope this is clear. I hope this is clear. All right. So this is what we call. This is what we refer to as what? As a candle sweep. A candle sweep, like I said before, is just simply the new candle. It is sweep is taking over the previous candle, but with only a wick and not the body. All right. I hope this is clear. All right. So that's that about that. I hope this makes sense. Right. Let's go back to um, our our note. Let's go back to our note, and then we'll continue from here. All right. Let me hide this. Let's go back to our note. All right. Go back to our note. Okay. Let's go back to our note. All right. So you guys understand clearly now what a candle sweep is, Abby. Now, this candle sweep can happen. This candle sweep can happen in any time frame you're trading from. All right, it can happen in any time. You see these sweeps in any time frame at all. I can show you in as many time frames as possible. I can show you in as many time frames as possible. But our focus, I will teach you the time frame I use and the time frame you should use as well. All right. So let's keep going. All right. Now, I honestly built this system myself. By spending hundreds of hours watching different traders and learning different concepts, and I was able to pinpoint this hack. Now, the truth is nobody taught me this thing. I spent time in the market, like I spent time. I was just asking myself, this market is doing one particular thing. And I was just watching the market over and over. And I kept saying, I kept seeing the repetition. And I began to pay attention to it and begin to dawn on me that hey, this thing would work. Oh, and I've been practicing it and it's making sense. In fact, in my crypto signal group, this is what I've been using to trade in the last few months, and it has been doing us wonders. All right. So yeah, let's continue. So what is the objective here? What our goal here? What our objective here? What do we do right now? It's simple. We need two time frames. All right. Our goal here is we need what? Two time frames. All right. First, we need a higher time frame for analysis. And like I told you earlier, I said a candle sweep can happen in any time frame at all. It can happen in 1 minute, happen in 5 minutes, happen in 10 minutes, 15 minutes, 45 minutes, 30 minutes, 1 hour, 4 hour, daily, weekly, monthly, yearly. As any time frame, a candle sweep can happen in any time frame. But as your teacher, all right, I would show you what I am using. Now, I'm not giving you a guess, I'm not giving you what I think will work. I am giving you what I am using and what works for me. All right. Now, so I told you here the objective is simple. We need two time frames for you to be able to execute this system correctly and effectively and make money from the market. We need what? Just two time frames. The first time frame would be our higher time frame, and this higher time frame would be for analysis, right? Now, in this case, our higher time frame will be what? Will be the daily time frame. All right. Please take note of this. Our higher time frame would be the daily time frame. I hope this makes sense. Now, secondly, we need a second time frame which would refer to as our lower time frame. Now, our lower time frame would be for the entry. All right. The first one is we need a higher time frame. The higher time frame is for analysis, right? And in this case, our higher time frame would be the daily time frame. All right. Now, the second time frame we'll be needing, which would be our lower time frame, which would be for entry, would be the 15 minutes time frame. So in this system, we are using only two time frames. First time frame is what? The daily time frame for analysis, and the second time frame is what? The 15 minutes time frame for entries. I hope this makes sense. All right, cool. So these are the two time frames we'll be using for this system. All right. Now, I'm not saying you can't do this on the time frame. In fact, I tried this on the 1 hour time frame and 5 minutes time frame, and it worked. All right, but it was just too fast and too noisy for me. So I have to go back to my former system. All right. So yeah, as you get more experience in this market, you can begin to try other time frames. But right now, as I am teaching you, I am showing you what I am using, and that's what you should use. All right. But as you get better and skilled in the market, you can try other time frames for your own experience, right? And for your own learning. I hope this makes sense. All right, let's go. So okay, I already explained this. I said here are a few time frame correction you can use. So you can use the daily time frame for analysis and M15 for entry. You can use the 4 hour time frame, all right, for analysis, and also use the M15 for entry. And you can also use the 1 hour time frame and M5 time frame for entry. But don't use these two. All right, don't. I hope this is clear. Please don't what? Don't use this 4 hour and 1 hour. Don't use it. Your focus will be to what? Use only the daily time frame for analysis and the 15 minutes time frame for execution or for entry. I hope I am clear enough on this, right? All right. Let's go further and further. Now, like I said before, I said the first time frame will be for analysis, right? I said this earlier, right? The higher time frame, which is the daily time frame, in this case, would be for analysis, right? And then the second time frame will be for the trade entry, which is your execution, right? All of these are enough for a day trader. For me, I am a day trader, all right? I trade daily, all right? We have different kinds of traders in the market. We have the swing traders, position traders, day traders, we have scalpers, and so on and so forth. But I am a day trader, all right? And the daily time frame and 15 minutes time frame is just perfect for me. I hope this makes sense. All right, cool. All right, so that's that. You will pick one and master it and stick to it. That's how you get better. Now, I've given you the one you are to use. I have given you what? The one you are to use. You are to use the daily time frame for analysis, and you are to use the 15 minutes time frame for entry. I hope this is clear. I hope this is clear. Let's dive in. All right. So on the higher time frame, what are we looking for on the higher time frame? It's simple. On the higher time frame, we just want to see a sweep, a candle what? A candle sweep. I explained this. I explained what a sweep is, right? I said a sweep is when the recent candle takes over or sweeps the high or the low of the previous candle with just the wick and not the body, right? I explained that by illustration. All right, so on the higher time frame, you want this sweep or liquidity to happen once we see a sweep on our higher time frame, which is our daily time frame. Once we see a sweep, then we would now switch to the 15 minutes time frame and execute from that 15 minutes time frame. Don't worry, I will teach all of these things step by step as we progress. All right, so just keep your heart together, keep your mind clean, and you get this. It is very, very, very simple. It is short, it is simple, and it is very, very effective. I don't have to say this. It is very, very, very effective. All right, but then you have to watch this video again and again and again and again and again until it clears up your mind. I hope this makes sense, guys. I hope this makes sense. Now, we are not focusing on market structure or any complex trading theories. No, no. Our focus here is not indicators or market structure or whatsoever, all those bullshit. Of course not. Our focus here is simple, and we are focusing on solely just the candlestick formation. I hope this is clear. Our focus is what? On just candlestick formation. Now, what do I mean by candlestick formation? Right? All of like that. It's simple. Now, look at this K candle, right? You can see a K candle has formed and closed. We see an L candle has formed and closed. We can see an M candle has formed and closed as well, right? So our focus in this trading system, is to just observe how each candles are behaving. All right. Once I can see how a candle is behaving, I know what to do next. All right. So my focus is what? On just the candlestick formation. I hope this is clear. It is very, very, very simple. All right. So let me just show you guys some very, very practical things, and then we'll round up with this class. I don't want it to be very long and lengthy, right? So that you guys can rewatch the videos and get it clearly. All right. So let's go into the live market. Let me just show you what I mean. All right. So let's go here. Let's go here. All right. Let's go here. So like I told you guys that we're using what? The daily time frame, right? Daily, you can see it here. Daily time frame here is for analysis, and the M15 time frame is for what? Our entry. So every day come on a chart, right? On any pair you're trading, any currency pair you're trading, whether it is forex pair or synthetics or crypto pairs or stock pairs, any pair you're trading at all in the market. Once you just come here, your first job is to go to what? The daily time frame and see what are the candles forming like. All right, so you can see, we can see this. All right, so we can see. Let me take this back. I'm coming. Let me take this back a little. Take this back a little. So our focus is just to see how the candles are forming. All right, how the candles are what are forming. This is actually what? A downtrend, right? Market is going down, right? But we don't have an issue with all of this move. Our focus is just on each candles. All right. Our focus is what? Is on each candles, not on the move entirely. Our focus is just what? On each candles. I hope this is clear. Our focus is on what? On each candles and not on the market, the market structure whatsoever. Our focus is on each candle. We are focusing on each candle individually. All right. How this is clear. All right. So let's take a look at um this candles from here. You know, these candles from here. These ones here, right? These ones. This one I circled. All right. Let's take a look at those ones, and then we'll go from there. So we can clearly see that these three candles just shows that the market is going in a bearish sentiment, right? Now, what do we see? What do we see with these three candles? So let me zoom this in. Let me zoom this in so that you can see clearly. All right, so we look at this candle. Look at this black candle here. You can see it closed here, but this is not a sweep, right? This is not what? This is not a sweep. Because why? The body of the next candle closed closed with it. Alright? So this is not a sweep, right? Because the body closed with it. So it means on this day, there's no trade for us. Alright? So it means that on this particular day, because this is a daily time frame, right? So it means each candle here represents one day. I hope this makes sense, guys. This is a daily time frame, right? So it means every candle represents one day. So it means on this particular day here, there was no trade for us because there was no sweep here. All we saw was the body of the candle closing, and there's no sweep. All right. Now we go to the next day. The next day, because the truth is in the market, you don't trade every day in the market. Not because you can't, but the market is not giving you opportunity. So unless the market gives opportunity, you can't trade. And if you try to force the market to take losses, and that's why you blow accounts, you blow your funds, because you are just trying to force the market to give you trade every single bloody day, and it doesn't work like that. So on this day there was no trade for us. On the next day we see a what? Another candle, but it's still the body that what? That closed. So it's not a sweep. But on the third day, what happened? What happened on the third day, guys? You can see this. You can see we saw what? This sweep. And this sweep right here is our perfect opportunity to trade. So on the first day, no trade. Second day, no trade. But on the third day, what do we see? An opportunity. So that we can see here, this is what? A sweep, right? Now, once we see this sweep in the market, our job would be what? To switch to our lower time frame and execute. I will teach you how to execute this as well. But for now, let me just explain this concept so that you can get the idea behind it. I hope this is clear. I hope this is clear, guys. You don't trade every day because the market would not give you the opportunity to do so. But whenever the market does give opportunity, you execute without hesitation. So on the first day, I told you guys earlier that we're working with what? Candlestick formation. We're not working with the whole market. We're working with just each candles. Each candles. Each candles. All right. I hope this is clear. So this is how you analyze the market with this system. Your job is to what? Go to the daily time frame, all right, and then find the sweeps, all right. And I told you a sweep is when a new candle takes over the high or the low of the previous candle. I hope this makes sense. I hope this makes sense, guys. All right. So now this is actually for a downtrend. Now let's find something that is bullish. Let's find a bullish move. All right, let's find something bullish. So let's take a look at this, guys. Let's take a look at this. Let's see. Where's my bar replay? A bar replay. Let's take a look at this here. This. All right. So take a look at this, guys. Take a look at this. All right. So take a look at this. So I told you before. I said our focus is on what? Is on each candles, right? So we can see this candle, this candle. Now look at this. This is a sweep, right? You can see here. This is a sweep, right? and that is our perfect entry model, our perfect trading opportunity. Now look at this again. This is another sweep. Another sweep is here, and this is another opportunity. Even below this, you can see here also another sweep is here, right? So this is what our perfect trading opportunity. See, the market will not give you this every day, all right? But the market does give you this every day, then you can trade every day, all right? I hope this is clear. So this is how this system works. I'm going to leave it at this, and then we'll continue from this place in our next class. I hope this has made a lot of sense. So I'm going to pause the recording now, and then you can ask questions before we call it a day. Our next class will be tomorrow by this exact same time, and so on and so forth. All right. So I hope this makes sense. So if you have a question now, you can go ahead to unmute your mic and ask.